Hey everyone, welcome to episode 3 of Q&A with Tori and Alex. Today we're focused on socially responsible investing. Our first question is, what is socially responsible investing and why is everyone talking about it?
Awesome. Well, yeah, socially responsible investing is definitely one of my favorite topics. According to Investopedia, an investment is considered socially responsible due to the nature of the business the company conducts. So another name for socially responsible investing is ESG investing. ESG stands for environmental, social, and governmental factors. So a socially responsible investor makes their investment decisions and looks at the ESG scores of the companies that they're investing in. So companies are typically trying to have a high ESG score so they can demonstrate that they are a socially responsible company. The concept of socially responsible investing has become very popular, especially lately, due to the increased focus on activism and corporate responsibility. So now more than ever, investors are looking into the greater impact of the companies that they're investing in.
Awesome.
Second question that we have for today is, how has socially responsible investing changed over time?
So lately there has been a shift in focus away from the E in ESG, so environmental, and more focused on the S and G, the social and corporate governance parts of the ESG standard. Those who most value ESG investing are millennials, women, and high net worth individuals. 87% of millennials and 64% of women say they value ESG factors. Millennials will be the generation to inherit and generate wealth over the next couple of decades. And women are increasingly heads of household, in addition to high net worth individuals controlling a lot of the wealth. So it's a trend that is likely to continue over time.
Cool.
How do ESG portfolios perform relative to non-ESG portfolios?
So the classic thinking and critics of ESG investing typically believe that ESG portfolios will underperform their traditional counterparts because they're missing investments in what some would consider important sectors of the economy. So think of sectors like energy and oil and defense, just to name a few.
Tobacco.
Exactly. So for this reason, the classic thinking is that ESG portfolios will underperform their traditional counterparts. However, most studies show that this is not completely true. Rather, ESG portfolios tend to closely rival the performance of their non-ESG equivalents. And I'd say this makes sense, especially as it becomes more and more common for investors to look for and to seek out companies that are socially responsible. Therefore, the most successful and adaptive companies, so even companies that are profit-driven corporations, are starting to see the benefits to their bottom line of acting in a socially responsible way. So again, kind of the conclusion there is that performance has been comparable, but now more and more companies are starting to put a focus on their ESG scores. Next question is, what is the future of socially responsible investing?
So a focus on ESG factors is here to stay, especially following the coronavirus pandemic and demonstrations over racial justice. The increased use of social media, increased amounts of transparency, and the increased call to corporate activism will lead to more and more companies working on improving their ESG scores. As our society continues to trend this way, the companies that already have a history of social responsibility or are quick to adapt will likely maintain a competitive advantage over their competitors. Therefore, the outlook for socially responsible investing is good in the long run.
Awesome, thanks. So look out for a future blog post for me on this topic, and definitely don't hesitate to visit our website or reach out to us if you have any further questions or would like to discuss the concept of ESG investing further. Appreciate your time, and thank you, everybody.
See you next week.